All right, well, first, let's hone in on what will be a very busy week for the markets and, of course, the U.S. economy at large. The marquee event will be none other than the Federal Reserve's final policy decision of the year. That comes on Wednesday. Joining me now is Kathy Bostjancic, Chief Economist at Nationwide. Kathy, thank you so much for joining. And what is your expectation when we hear from the Fed on Wednesday?
Well, good morning. Happy to join you. So our view is they're going to cut interest rates 25 basis points. We've had that view for quite a while, and now it looks to be, largely a done deal. Markets, as you mentioned, are pricing about 97% probability. We've gotten no pushback or signals from the Federal Reserve that indeed they would not, go ahead and cut rates. I think what's going to be more interesting, though, is the guidance that they give us. They'll give us a whole set of updated macro and interest rate, or the so-called dot plot estimates, and also, as always, the press conference by Chairman Powell will be really important. Our view right now is that they probably pause the rate cutting cycle in early 2025. They first want to assess any prospective policy changes that are going to come out of the Trump administration. We know there's lots of talk about tariffs, and could that feed through to higher inflation, scale back maybe on immigration. It may be even a little too early for them to assess that fully, but they can take stock of current economic activity and inflation at that point, and just slow down the pace of rate cuts for next year.
Mm-hmm. We've seen support build around the president-elect's economic agenda. Kathy, what are your expectations for growth in 2025?
Yeah, I think, first of all, the economy is still quite strong right now. So you've got a lot of positive momentum as we head into 2025. And we think that continues. And we do look for some moderation because we're seeing the cyclical sectors of the economy cool off a little bit, but not dramatically. It should still remain pretty solid. We're looking for growth that's probably a bit below 2%, but still very respectable. Where the uncertainty lies really is, what do we get in terms of trade or tariff policy, immigration changes, also deregulation. And on the positive side, as the equity market is soared higher and business leaders are optimistic that deregulation will propel the economy. Now, tax cuts or tax extension of cuts that were enacted under the first Trump presidency, we really just will hear a lot of talk about that next year. But we actually don't get, that's not until the end of next year that they need to be extended or not.
Mm-hmm. Let me ask you about some of the data coming out this week, Kathy. Of course, we discussed the Fed decision on Wednesday. The market, by and large, agreeing with you, pricing in a large percentage point chance that the Fed actually does move forward with that 1/4 percentage point rate cut. We'll also have data like retail sales, among other reports coming in. How is the consumer holding up? As we know, consumer spending does fuel the vast majority of our economic growth.
Yeah, the consumer's been incredibly resilient. And when I say resilient, it's not as if it's bouncing back from weak growth, meaning resilient in the face of still high price levels and sticky inflation and high interest rates. So aggregate consumer spending, retail sales should be on the healthy side here, especially during the holiday season. Now, if you look at the breakdown among different households, the upper income are feeling the most flush right now. They have this tremendous wealth effect going on. Home prices up, the equity market up, and their wage growth is more than kept up with inflation. When you move down the income spectrum, it gets a little tougher, especially the lowest quintile. They're struggling right now with high prices and high interest rates. So they're going to be a bit more cautious. You see more price-conscious spending on their behalf.
Mm-hmm. Of course, we'll see how that impacts inflation as well. Inflation has been stickier of late, and I've had other economists join me who think that perhaps that goods sector, when we look at the pace of price gains, Kathy, in the new year with the new administration and a new economic agenda, that if tariffs, for instance, are truly enacted, as President-elect Trump has promised during his campaign, that we could see the pace of price gains on goods pick up at a time where we are starting to see some softening, much needed softening, I think many people would say, in the services sector, like rent, for instance.
Yeah, I would agree with that, concern. We certainly, the good news, right, as you mentioned, is rental inflation looks like it's finally cooling. We've seen that in the last few months, and we think that continues. We've also seen transportation costs, repair costs for autos, motor vehicle insurance costs, all of that easing, and we think that continues. So that really helps the service side, which, as you pointed out, has been the sticky part. The core goods, we've seen an upturn on the monthly readings most recently. We don't think that's necessarily sustained. Like used good car prices popped, new car prices are higher. Some of that was related to the hurricanes, but you're right. If we get tariffs and the tariffs are passed on to the consumer level, that's going to show up in the goods sector. So something we have to be watched. We're hopeful, but we probably see the underlying trend for inflation still be disinflation, but we could see a little bit of upward pressure from tariffs. How the Federal Reserve reacts to that will be interesting. Do they look through it as they were inclined to do under the first Trump presidency, thinking, well, this is not really a sustained inflationary pressure? Or do they get worried that maybe this could be, this time we have, a slightly stickier inflation backdrop? Would they be worried about that? And that could cause them to cut rates less for next year.
Kathy Bostjancic, chief economist at Nationwide. Kathy, great to get your take, especially as we set up what will be a busy week with the economic data very much in focus.
Thank you very much.